You're watching the Daily Market Comment at xm.com by Marios Hadjikyriacos. I'm Christina Marujos. The Brexit saga remains the dominant theme in the FX market, with investors holding their breath to see whether a deal will be reached. This morning, Chief EU negotiator Barnier said a deal is still possible this week, sending the pound soaring. The relief rally may not be over just yet, as most potential near-term outcomes seem favorable. A deal being announced would probably see the rally resume. If nothing is agreed, then an extension and an election seem inevitable. There are two likely scenarios after that. Either Boris gets a majority, strengthening his negotiating hand and making it easier for him to push any deal through Parliament, or a Labour-led coalition gains power under the banner of another referendum. The British pound wasn't the only asset boosted by Brexit optimism today, though, as stock markets across Europe are also a sea of green, while futures point to a higher open on Wall Street, too. Looking past equities, though, the bond market isn't so cheerful, with U.S. yields trading lower today. Likewise, trade-sensitive currencies like the Aussie and the Kiwi can't get off the floor. This perhaps illustrates that the risk-on rally is on wobbly legs, as markets digest that this is probably as good as it gets in the trade war. Having taken a small deal, much of the pressure to make concessions has come off China, meaning that any further progress is unlikely in the coming months. Admittedly, with another round of tariffs still scheduled for December, this may simply be a calm before the next trade storm. Elsewhere, Trump announced yesterday that he will raise steel tariffs on Turkey and sanction two Turkish ministers, demanding that the nation halt its military excursion in Syria. Yet the lira is trading higher today as markets seemingly expected much tougher action. Indeed, given all the criticism the Trump administration has drawn for giving Turkey the green light to enter Syria, this seems like an exercise in damage control and public relations rather than a real attempt to stop military operations. This was today's Daily Market Comment here at xm.com.